Yo, what's up? This is Noble. As you could tell, for those who watch me regularly, I'm not at home. Background looks different. I don't have my little sound machine. I'm holding the mic. And I got COVID. COVID finally tracked me down. I thought I was the cure all this time. I just knew it couldn't get me, but it got me. So I don't feel 100%. I'm clearly off on my timing. I'm actually not in Atlanta, so it is 8 o'clock right now, but technically it's not 8 o'clock. Time zone thing. Plus, I was having some issues a little bit with just the technology, but I do want to cover some things today. Today won't be a long session. Normally, I do these, and it's like, man, I could go easily for 2 hours almost every time. Today's not going to be that at all because I really don't feel 100%. But I do want to cover some things because I think you guys need the, tune up, quick insights. So we're going to talk about where the market is, where the double bottom. I want to show you, I want to talk about briefly the VIX, the volatility index, and what that is and why you should know where the VIX is at all times. You should know about this masterfully powerful piece of, I don't even know what to call it. It's powerful. It really, really is. I want to show you intraday, a little bit of futures today, which I don't normally show, but I know a lot of you, well, some of you guys are trading futures just, on your intraday game. So I do want to show you just today and yesterday. Real simple. I want to give you two things that'll definitely help you make more money. They should. And if you're not using them, something's wrong. I want to hit a couple of your favorite blue chip stocks. And I also want to let you know about my upcoming 8-week course, which some of you guys already know about. You should already know about it. It's called Limitless Options for Income. We're gonna go for 8 weeks strong, and I'm gonna do my damnedest to make sure that you leave knowing way more than just the basics with options, because too many people only know the basics. So I'll talk about that towards the end. No sales pressure, but some of you guys definitely need the skills. You need the skills. You need the skills. All right. So stay on. Make sure you hear that towards the end. Let's see. Somebody on LinkedIn said thank you. I don't know who's watching, but thank you for watching. And then somebody said, I hope you feel better, sir. Yes, I appreciate that. Okay, so let me pull my charts up real quick. Let's just dive right in. I don't have the music. I can't even do my normal thing. You know what I mean? So let's start here. What I got on this I'm just going through my notes. I'm gonna start with the S&P. It's SP. Oh, matter of fact, let me do this. Let me change these colors. Because I always make the mistake of not letting you guys see this strong green. I want you to see the green and the red. So if you're brand new to trading, this is called a stock chart. We're going to keep it real simple. Each one of these candles right now that you're looking at represents a week in the market. If the candle's red, that means price came down. If it's green, that means price went up, right? So we're at something that's very classic. It's one of these charting patterns that's called a double bottom. Double bottom. Why do we call it a double bottom? Because if I drew a line and went back to January, which these were the January highs, we essentially have been in a downtrend all year. Then if I was to do this, just really connect these swing lines here. All right, show you all these little peaks and valleys. All right, ran back up to 462, had those 7 strong weeks where we came down to 380, had a little bounce there at about 420, went lower down to 360, ran back up to 430, and like clockwork, we are right back at brand new lows as of today. So if I put a little circle right here and right here, clearly you can see it. This area here and this area here, same place. So this is your classic double bottom. Classic double bottom. Matter of fact, let me show you guys this from a month chart perspective real quick. Just kind of give you a little bit, right, kind of broader view. So this was the COVID lows way back here. These were the COVID lows. And then we had this monstrous, 18 months of nothing but growth every month, higher. Right in here, we had a little period. This was September, August, September, October, November. All right, so I had a little period there, and that's normally the toughest part of the year. Which I mean, we're pretty much there now, right? So we're back to that September. September and October are historically. I forget which one it is. I think it's October. That's technically the worst month of the year historically, right? Over 100 years of data. All right, so unfortunately, we are walking right into we're walking into the worst month of the year in a downtrend in a year that has not created a penny worth of value. If you bought the S&P from day one, you have not made any money, right? If we're keeping it that simple for the year, we're down for the year, and we're at a really critical place. So these double bottoms, what generally pans out, let me kind of show you this. I'm gonna go back to the week chart for a second. Usually there's a high propensity for the market to bounce. Buyers get excited here. I've been seeing a ton of people, you get out the self-proclaimed gurus, real gurus, people that don't know nothing, people who just been making money for 2 years and now they feel like they're expert. You got the whole gamut. But if you're paying attention, if you're on social media, if you're watching the shows, a lot of people are like, buy, buy, buy. It's a great time to buy. So let me give you some perspective. If we're talking long-term investing and we're talking about companies that you truly, truly believe in, this is the way that the math works out. Let me do this for a second. Matter of fact, let me go back here to show it to you. I want to show it to you. Here's what you got to ask yourself. I'm going to go back, month chart. I'm going to go all the way back to the recession. All right, so this was the recession. All right, this was the recession. Now I'm going to just make two really big lines. Maybe three. Had a little pullback here. And then eventually the market took off. All right, you guys see that? So that's where we've come from. But if I go back here, here's what I want you to think about. A lot of people don't approach the market this way, and you really should, because it's really math. Should you be buying right now, or should you be sitting on the side waiting for your favorite stock to go lower to buy more, as if you can perfectly time the bottom? Here's what the math says. If you were to, during this period right here, during the recession of 08, you were literally with the S&P, which is what I'm showing you. You were to keep you continue to buy every single month throughout the entire dip. So you bought the low and it went lower some months, and you kept buying, and you kept buying. Right? The way that the math plays out, it's actually, you would have made a higher percentage return if you consistently kept buying versus, and I literally have done the math on this because you could just use those what do you call those past return calculators, right? And I ran several different scenarios. All right, what if you kept investing the entire time during the S&P every single month, knowing we're probably going to go lower, we're in a recession, but you kept buying, dollar cost averaging, you just kept buying, you kept investing, you're building equity, right? Would it have panned out better if you kept buying there? Or what about if you started buying when we got back up here? Because you're like, oh, well, I avoided the entire recession. We're now at a higher, right? The prices are higher, right? So here is higher than where we started. We've gotten back above those highs. Now I'll safely start investing. What I can tell you is, if you would have bought here, if you would have bought back here, if you would have had super technicals, and there is a way you should have kind of known that we were coming out and finally getting some momentum here, regardless of where you started buying, you still would not have made a higher percentage return versus simply continuing to buy and being what a long-term investor is. It's long-term investing. All right. I know some of you guys don't feel comfortable right now investing. Part of the problem is you really don't we make it seem like investing is easy, and it is, because it's long term. You don't have to have a ton of discipline. All you got to do is keep buying, technically, right? But here's what nobody says. It's actually really, really hard to be a great stock picker. So if I told you right now you could only invest in 5 to 10 stocks, and we had to see how those 5 to 10 stocks pan out 10 years from now, you don't know if you're a good investor until 10 years from now, which is why I'm really big on telling people, and I know it's super simple, but it's safe and it makes sense. If you were to just buy NASDAQ month after month, if you had just been doing that since, pre-COVID, pre-recession '08, going all the way back as far as you can go, and I should put it up on the NDX, you actually would have easily beaten most mutual fund managers with multiple degrees and all this series of licenses, and they manage all the world's money, and they manage your 401k and your IRAs, and they manage all of this stuff, and they have teams of analysts. But 96% over a 10-year period, S&P puts this stuff out over a 10-year period, right? 10-year period. 96% of those fund managers cannot beat the S&P. It's proof that most people are not these amazing stock pickers. You're just not. It's kind of like trying to be a day trader. You just stepped into a world that has a 95% failure rate. Most people are not amazing stock pickers. Now, I'm not saying I don't want you to pick individual stocks. I'm not saying that. I'm definitely not saying that. But what I am saying is, if you're the person who's a little bit more basic, in the sense of, for your long-term plays, you really you've learned some skills that go beyond just the basic investing. And really what I'm saying is you've learned stock options. Right? You have to learn options. I'm sorry, I don't care who you are, I don't care how old you are. I'm not saying this because I teach classes on options. It's just a really, really, really amazing way to build wealth. It is. So when we start talking about options and trading, that's where the conversation kind of changes for me. But once again, if we're just talking about long-term investing, once again, here's how the math plays out. If you just kept investing during all the '08 recession and continue to invest, there's no way that you would have made more by picking some perfect point to start investing again. Now the question is how well would the companies that you would have picked or that you were investing in 10 years ago, what did they do? All right, because everybody thinks it was easy to pick Netflix, which had like the highest return, at least from those '08 recession lows to like these previous highs that we were at. Netflix was one of like the best, literally, like the highest percentage return you could get was Netflix. But I know for a fact most of us were not putting money in Netflix every month. You didn't pick it. You didn't 10, 12 years ago say I'm rolling with Netflix for the next 10 years, right? So that's where this gets a little tricky. Little tricky. So I will say this. I'll say this and then I'm gonna move on. If we're talking about investing in the market itself, S&P is, it's the broad market index that the whole world loves. NASDAQ is going to outperform it because it has a different set of asset classes. It's just a better performing index. You would have made more, hands down, if you just invested in NASDAQ. And it beats 96+% of all the fund managers and all their teams out over a 10-year period, right? So I really do think the long-term investing game is and I've said this for years because as I did the research and kind of rethought buying and getting in and out and just that whole thing, I'm just like, most people would do a hell of a lot better if they just bought the biggest, best index in the world that has been the top performer for the last 20 something years. So that's my spiel on that. Back to this double bottom. Okay, so let me zoom back over here. Let me actually go back to the week chart. So here's what generally happens. Generally happens during a double bottom. If you're like me right now, you're really not doing anything. Why? Because I was selling. I actually, like, right now I got I didn't close them out. I got a few contracts left. But all this year I've been buying puts. I've been short. It doesn't make sense to me to be long in a market that's simply short. Right? We had matter of fact, let me add one little thing here. I ain't gonna put any major indicators on my chart. I know a lot of you guys are new, and so you want to kind of You want to ease into using mathematical indicators or what they're called, but I keep seeing like I don't know, maybe it's just the stuff I'm paying attention to recently. I keep seeing people talking about how like they're not using any indicators as if that like I don't know that makes you somehow smarter. And it's like the indicators aren't designed to predict the future; they're math. So if you like math and realize that trading is a business, why wouldn't you use mathematical tools to help you to be even sharper? That whole like, oh, I don't use indicators thing is just weird to me. And I guarantee you, all those people who usually are saying that stuff, they're not amazing traders. You can put together what's called price action, reading the charts, and really smart indicators, but there's hundreds of indicators. So then we get back to the question of what really works, right? Which takes time to learn. So I'm gonna say this. I'm gonna just throw it out. One of my favorite indicators, y'all know I've mentioned it a million times. It's called a TTM squeeze. I love it because I understand it really, really well. Before they created this TTM squeeze, I was creating the squeeze myself. What does that mean? It's a combination of Bollinger Bands and Keltner channels. My very first strategy 13 years ago when I was trading futures was wait for low volatility period trading natural gas futures 8 in the morning. If price was above a Bollinger Band, I would just short it and go the other way. That's all I knew. If price was under a bottom Bollinger Band early in the morning, didn't realize I was buying and selling during a period of low volatility. Didn't really understand volatility at the time, but I was still making money. Right? I would buy when it was at the bottom and just wait for it to go up. That was all I knew. Bollinger Bands. Right. And so clearly 13 years, I've learned a ton since then. But Bollinger Bands and Keltner channels together are just such a powerful mix. Right. So um they created this indicators called, TTM squeeze, trade the market squeeze. It's essentially the combination of those two specific indicators, which are designed to tell you something really, really important about volatility. And volatility, volume is what moves the market. It's how you make money. Going with the trend, with the momentum, all these different words, going the right way at the right time, right? So I'm gonna just put this little bar right here. I'm gonna put this bar right here. This is February 7th of this year. You got this one little red bar here on the TTM squeeze week chart. And there's so much more I could say, but in a simplistic way, that really was all you technically needed. At least to say, you know what, this market is probably about to go lower. And I need to think about how I'm going to make money as this thing goes down, if it does. And I probably need to learn a little bit of something about options and how to use puts to my advantage to make money when things go down, because you can make money when things go down. You don't have to sit here and be paralyzed just waiting on the market to go lower and not knowing what the hell to do. Right? That's not what the most savvy. That's not what the people who really are trying to protect their families from recessions and from crazy economies and just all this stuff that happens. Like, you got to know the real game. You can't be limited only knowing how to buy. You can't. All right. So, uh, yes, I mean, so this year technically has been very smooth. It really has. It's just been bearish. That's it. That's that's why this has been tough for a lot of you guys, because the 2 years before was nothing but a really, really, really strong uptrend. Last November, December got a little tough. We never got this Christmas rally, this bounce that happens towards like end of Christmas, right after Christmas. You know, that 2 week period right there around January. We never got that. We went into a downtrend, and we're still in a downtrend, and then we're now at a double bottom. Right. So think about. Hopefully this doesn't hurt your feelings, but think about if you were really, really confident all year that the market, first of all, you knew the direction. There's a ton of indicators I can pull up to show you. And if you basically can just read a price chart, which, I don't want to get too deep, but if you are that person who can just, you love basic price action with no indicators, you still should have been short pretty much this whole year. I don't see how you get around that. Right. Let me draw a little, for fun, little trend line real quick. I'll draw it across these two. So check this out. This line here, this was the top of the year, and then you have this little peak here at this was March. If I literally draw that line straight across, y'all, That's exactly where we just went about 4 or 5 weeks ago. That's where you should have been. The VIX, which I'm gonna talk about in a second, a couple other factors. The market was bearish. So even though you had this nice run, we pushed up, from this bottom here, this little wave pattern. This was about 10 weeks. We came right back down in 7. So that tells you kind of, confidence of buyers versus confidence of sellers. We came down 7 weeks. It took us 10 weeks to go up, 7 weeks to come all the way back. But this line right here, if that wasn't on your chart, you're just not taking it serious. And we hit it perfectly. Perfectly. Months before this even happened, that line should have been on your chart. All right. So let's do this. Let's jump to the VIX for a second. And the VIX is, what is the VIX? The VIX is volatility index. It essentially measures, called the fear gauge. Why? Because it's specifically measuring 30 days out forward-looking options contracts on the S&P. Why is that key? Because if you had billions of dollars, let's say millions, multi-millions to billions, anywhere, you're rich, wealthy, not on the come up, not on the wealth accumulation, you're in the wealth preservation. You've made it, your family's good. Generations are covered. You just trying to make sure y'all keep some of this damn money. Right? You think different. Right? And so when things get really uncertain, what happens? Fear happens. What does that mean? When we're afraid of, we don't have the confidence to believe that prices are going to go up. You know what happens? Smart traders, wealthy, well-advised folks, they make sure that they're going to make some money even if the market drops. What does that mean? That means they start buying puts. Puts is just making money when stocks come down. Right? So think about that for a second. If we go, we're already in a recession. If the next 12 months are no better than the last 8 for this year, right? And the market continues to go lower, and we get a little bounce, and we go lower, and then you think, oh, we're out of the recession, we're finally about to get up, and then we have something happens, and we start coming back, and we break low. Let's just say we pretend we have a rough 12 to 18 months. What do? Right? Part of it is you got to be nimble enough to understand one of the most fundamental things about the market, which is you can make money when things are bad. You can go both directions. I was blown away years ago when I found out about shorting. It didn't make sense to me. I was like, how the hell did I not know this? Right? So when the VIX, when the market is giving us scenarios that we do not understand, COVID, bubbles bursting, issues with China, even when Trump got what's the word? I can't think of the word. Y'all know, back in 2018 when he got impeached the first time. Like whenever these macro level things happen that scare the really, really ultra rich and wealthy and smart traders, right? Because you don't have to be super rich or wealthy to be a smart trader, which is why I keep saying the word. We go into, it may just be time to make some money on the other side. That's really all this is, right? It's the flexibility of going both directions, right? And so when we have these really bad, quote unquote recessions, the goal, if you're on a wealth accumulation side, is to take advantage of it, learn how to short, learn how to buy puts, learn how to really read a chart. You can make a lot of money when things are bad because things drop really fast, right? And if you're on the wealth preservation side, or you're doing kind of a little bit of both, right? You're flexible in that way. Yeah, your portfolio is going to take a hit. Everybody's portfolio is going to take a hit. There's nothing nobody can really do to stop, what's happened all year. Everybody's portfolio is down, right? I don't want you guys to take, and it's unfortunately there's so much bad advice out there. Like I see people in these videos talking about, oh, this is when you start buying Dollar Tree and you start buying this stock, and it's like, well, when do you get out though? right? People kind of just throw out this stuff that sounds good, but without enough context to like fully walk it through. You got to be really, really careful. You really do. So, if we look at the VIX again for a second, check this out. I want to show you this. Show you this with the VIX. Oh, why did that not come up? Let's see. So I'm gonna just draw some lines. I'm gonna draw some lines. Now, why did that do that? Okay, I just want you to pay attention to this last line. The VIX is inverse. What does that mean? It's the opposite. All right. So when the VIX goes really, really low, and then it slowly moves to a period, right? And there, the numbers here are like roughly this is like 20, and it ran up to 32, and you can see it just keeps kind of bouncing at 32. All right, so we hit 32 up here, back here, back here, back here. If I flipped and matter of fact, where is that to? Wait, hold on, let me find it. Let me find it. Oh. I'll do it this way. Hold on. Let me show you like this. I want you guys to kind of know how to, in a real simple way, to start analyzing the VIX for yourself and kind of have some fun with it. All you really got to do to start analyzing and get what the VIX is doing. All right. Put a circle, mark the date for this highest point. That's 8:15. All right. This last highest point here. So that was 328, 328, and 8:15. March 28th, August 15th. Then you go back to the VIX. A perfect world, if you literally perfect short would have been shorting on either one of those weeks, which was actually very possible to do. I mean, I pretty much did it, and I know a lot of people that have the skill set to do it. All right, it's just comes with time. But if you go back here and look at the VIX, and then we look at what was that, what did I say, 328? So 328 is basically right here before the VIX flipped direction. And then what was that, 8:15 is essentially the week right after we made that low. Right. So when the VIX went low, flip back to the S&P real quick. VIX went low. This is when the market was giving you an amazing opportunity in a bearish market to make money and ride the trend down. All right. So everything you were doing before this year, some of you guys know about the VIX and pay attention to it and kind of know how to read it and use it, a bit with your trading. But it's a little different when we're in a bearish market, right? Where the nice, clean, very easy moves are these bearish moves, right? So instead of kind of, we say buy low, sell high, but that really is like the strategy. It's buy low when we're in a bullish uptrend market. All those dips should go higher, right? They will. That's what creates the uptrend. We had that for like almost 2 years. This year's been different. So we say buy low, sell high, and I think people think that that mantra is saying, well, you should buy it low and then sell it when it's high. When it's really saying buy low, comma, that's option one. In a different market environment, you want to sell high. That's two totally different things. That's not one continuous. I'm buying and I'm selling to get out. No, I can buy to make money or I can sell to make money. Right. And so these years, they force you to upgrade your skills. It's not a bullish year. It's not the same. It's not the same mechanics. Well, technically it is. It's just in the other direction. All right. Once again, I'm talking trading. I was talking investing at the beginning. I told you keep investing. The market is strong. It's over 100 and some years. This is the best thing we've been able to come up with to create wealth. Let me see. Somebody had a question. Somebody said when the VIX is above 30, that's an indication. When the VIX is above 30, that's an indication to buy, right? But what does it mean if we're at a double bottom in a downtrend? Oh, this is kind of all that I'm talking about now. What does it mean if we're at a double bottom in a downtrending year? Does that mean we're getting ready to reverse, or we wait to see if the double bottom breaks? Yeah, that's a great question. You kind of summarize all of essentially what I've been kind of slowly talking out and walking through. Yeah, in a general year, that like think about it like this, y'all. Matter of fact, I'll do it this way. I'll show you. I'll show you. I'll do it even better. I'll show you guys. Hold on. Let me do it this way real quick. If I went back to before, like this little peak right here, this week right here. So this was a little downtrend, right? A little pullback. I mean, not a downtrend, a little pullback, and then we went higher, right? So this was around 10-4, right? So that was like October. I'll put a little circle. That's like October 4th. Let's see. Somewhere, I don't know how far back I want to go. Actually, I'll just look at that one. So we know right in here, right? We were in an uptrend, right? Market was essentially, making new highs, and we got a pullback. It's just old historical data, right? And we went higher. Right? Clearly, we've changed direction. But if we look back here, just at that period, yes, you already know what the VIX was doing here. This is when the VIX spiked. The VIX was up. This is when you want to buy in a downtrend. I'm sorry, in an uptrend, right? Because you're going with direction. Now, I'm not even saying you don't want to per se buy. If we start talking long-term investing, right? And that's where you see my commentary. I kind of have to keep bouncing back and forth. If we're talking about trading, then right now for me, it's just been so much easier to simply go with direction. When the VIX goes stupid dumb low, it's been just easy money because we're getting these little spikes in a downtrend, and the market goes right back down, and the VIX goes right back up, right? Which is kind of what got us here. So let me go back to the VIX and show you this. So this was 927 10 4. So 927 10 4. So VIX. If I go back and find that, um, oh, where's not 27? Wait, let me get make sure I got the right date. Oh, right in here. So that week that I showed was essentially this. I'm put an X. So the VIX got up to about 28. Right, didn't get as high, but if I looked right here on 11/29, that's when the VIX kind of started to, once again, November and December is when we started getting really rangy. We kind of were just going up and down, up and down, up and down, really kind of telling you that this uptrend was potentially about to end, right? This 2-year uptrend potentially about to end. So, yes, theoretically, when the VIX is high, you want to buy. But what do you do when we're in a downtrend? When we're in a downtrend, if we're talking options trading or trading of any kind, I think it's literally as simple as just going the opposite way, right? You want to be short. And so if we look back here, right, when the market was down here just a few weeks ago, that to me, along with looking at, once again, I'm gonna just draw it one more time. Right, that trend line was already on my chart, so you should have already known where price had a high chance to go. We're not bullish until we break across that trend line. Right, it was established in a down year. We hit it perfectly, and that exact same week is when the VIX made the spike, or that point to make its lowest point. Right, so that's when you essentially are shorting, kind of catching this move back down, knowing that we're in a downtrend, and it's sell low. It's buy low, sell high. It's buy low, sell high. Let me see. Oh, Adrian, I see your I see your I see your comment. I'm gonna read it in a second because my voice is slowly going out. But I just want to make sure I cover that question. What does it mean if we're at a double bottom in a downtrending year? It essentially means that we're going to definitely. Usually, what happens in these double bottoms is there's some level of buying that happens. Could we bounce here? Could this be the worst? Yeah, that's definitely possible. Definitely, that is possible. 100%, that's possible. So usually what happens during these though, the smart people kind of wait to see if we're going to get true momentum from bulls. Now there's a couple different ways I could kind of from a technical analysis perspective, we could talk about what a breakout looks like and like what signals do you wait for. All right, that's a whole nother thing. But to keep it simple, just because we're here, it doesn't instantly mean we're going to crack and fall through. It also does not mean we're instantly going to bounce and return to an uptrend. So it's tricky. If you're like me right now, you kind of just you're being patient. And once again, if you think about all I've been talking about this year, right, you should right now comfortably be exiting positions because you should already been short, right? So it's if this were a strong uptrending market, I'd be saying the opposite. But we're in a downtrend. And then let me see. Last question. Last two. Does that mean we're getting ready to reverse? No. Once again, usually there is some level of bounce. And so we'll often attempt to reverse, but will we go from downtrend into reversal, attempting to get more bullish activity, and then actually start to create a series of higher highs and higher lows? Market is good. We're back flowing. We're going back to the highs. We're a long way away from that, in the sense that it just has to happen. Can it happen? Yeah, it can happen. It can surprise everybody. Can it happen? Yes. Right, but it has to play out. And all we know factually right now at this moment, bearish market. VIX just went low. 7 weeks, we came right back down to where we just were, these summer lows. Right. And if I went to a little bit of my longer term indicators, it's definitely looking like we could go. It's definitely looking like we could go lower. But we're not there yet. Right. And so when we start talking about trading, it's like your entries, you shouldn't be entering shorts right now. If anything, you should be holding on to some, saying, I think if you fundamentally believe we're going low, you're just like, man, we're going lower. Right? You should have already been in puts. You should be laughing at this market. All right. But it's about getting the right entry. So or I'd say using things like the VIX to help you understand the, overall macro level trend direction. Okay. Let's see. Adrian said this is rather entertaining. That's what's up. What's up? What's up? How you doing, bro? He said, I do want to clarify the statistic about the vast majority of fund managers underperformance. So Adrian's my guy, y'all. We debate all the time about everything, and we do agree on some stuff. We really only agree on Jesus. Everything else we disagree with. This is my guy. It's very actually, you know what? I won't even try to say what you do because I know where the question comes from. But anyway, I'm just saying what's up. I love when people that I know and have great conversations with engage. So let me just keep reading. He said this stat is relative to the fund's stated benchmark. Because of their own investment policy limitations, it makes it harder to outperform, whereas tactical individual traders can fully liquidate their personal portfolios. Multi-billion-dollar fund managers cannot legally violate the fund's policy of investing. Yeah. I don't think that changes fundamentally what I said though, which is most people don't know if they're great at selecting really, really great companies that will continue to build value 10 years from now. Most people right now in this moment, and you know this, Adrian, most people cannot tell you their top 5 to 10 picks that they are not going to be all nilly-willy in and out of a million. Like, you know what I mean? So there is you're right. You're 100% right with some of the limitations with what retail traders can do versus what clearly these huge multi-billion, conglomerates can't do. But I think once again, from an education perspective, as long as I've been doing this, very few people like really have a knack for predicting. I don't want to say predicting, but finding those stocks that are the gems, the ones that 10 years from now they can just stay very disciplined with, continue to buy, because as we know, and you know this too, most people get in and out of stocks too much. We're so finicky. We're let's go back to COVID. Oh my God, what was everybody buying during COVID? Peloton, uh, Beyond Meat, Zoom, Clorox, right? And I saw a ton of people. These are great investments, and I'm like, those aren't investments. Those were not amazing. Those weren't. We weren't even talking about those companies before COVID, right? So I think that's kind of the core heart of my point, right? It takes a lot more education and skill set and really understanding of what a valuable company truly is beyond just looking at a chart, right? And that ability to really outperform, like it's something worthy of patting yourself on the back for if you can do. You know what I mean? Most people are not going to beat Nasdaq year after year, month after month. So I'm not saying you shouldn't try, but but so great point, great point, great point, great point. Love that. Let me see. So I went beyond my time, and while I do feel better, this COVID does have me over here kind of hot right now. So I hit the VIX. Let me do something real quick on futures just for a second because I know I got some futures folks who are always paying attention. I'm gonna keep this real simple. I'm not even gonna talk about I'm not even gonna talk about anything complicated. I got a naked chart. Matter of fact, I'm gonna take everything off. I don't want any indicator on it. The only thing I'm going to put on this chart uh, is a daily high and low. That's it. Real simple. Daily high and low. Today, the market opened. We pushed up. We perfectly went to the high, had no continuation. Reversal ish, hammer ish sort of candle. It's kind of a doji, but not really a doji, but it ain't really a hammer. It's one of those. Either way, if you got a little bit more advanced skills and you were trading ES today, that one candle right there should have told you, we're probably not about to break the high. We tested it, right? Made a new low. I'm gonna just keep it super simple. I'm gonna just draw a little trend line. And right in here, right in there was your break. You had a low for us to go to. We hit the low, kind of just, for a good 20 minutes, sat there, and then we just crashed and went back to the low. Right. So I didn't want to do something real complex on, the intraday stuff. But it was pretty much the same thing yesterday. Yesterday we didn't get, where's the old high? You can even see the high from yesterday because we dropped dropped from overnight. But we did the same little move up. And yesterday's was stronger. And then actually I'm gonna just connect these two. Period of kind of right in here is almost the exact same thing. Kind of broke that trend line. We could have pushed back up. What are we gonna do? We started to go lower. As soon as we're starting to make that downtrend on these intraday charts, y'all, it's going to the low. Like we're in such a period right now with the broad market, recession. I'm wearing a bear's cap. Like everything's so sensitive and electric right now that, for those of you guys who are like day trading, man, if you're not paying attention to these highs and lows, and really using those as very solid targets. I don't know. I don't know what you're doing. And the only reason I'm saying that is because I still see people posting things and there's no, like, I'll see their charts, but there's nothing that shows where the low is. And I'm like, that's all we're doing every day is testing highs and lows intraday, right? So for what that's worth, make sure you have, and on Thinkorswim, what I added was just something called a daily high low. So it's just literally just two lines to make sure you know every day where's yesterday's high, where's yesterday's low. We cannot go higher unless we break a high. We can't go lower unless we break a low. All right. Let's see. Let me do this real quick. I'm gonna jump around and I just want to check. Let's see. Let's look at some of take charts. Let's just see how much some of these stocks that we all know and love, how much have they pulled back from the highs? Let's see. Apple from these highs, which was, what was this? February. Oh, I forgot I'm on the month chart. Let's see. As of today, down about 17%. S&P from that high looks like right about now we're at about 25%. I'm gonna cover a couple of these. Amazon, how much is Amazon down from its highs? If you're investing in Amazon, if you're trading Amazon, you should know this already. Let's see. Right about now, 40% down. Take a couple more. Actually, I'm gonna skip Microsoft. Let's go to some that fell from grace. Oh, Meta. I want to hit Meta. Facebook. Facebook is gonna surprise you. It's down 65%. 65%. You should think of that as a sale if you believe in the company, if you know a solid 10 things related to how they actually make their money. Right? And you're the educated investor who believes in the company, not because somebody, on social media, not just because it's quote unquote popular. There's a lot of popular stocks. Right? These companies, you really have to do your research and make sure you know some things about the business, fundamentally about the business. Do you read the annual reports? Are you a actual customer? Can you talk to me about how they're managing debt, plans to expand and grow, how they're battling competitors? There's tons of financial ratios. There's a whole fundamental side along with this very technical side that I'm showing you. All right. This is Netflix. Netflix is down as of today about 70%. 70%. So, um, matter of fact, let me show you this one other thing on Netflix. I'm gonna get rid of all this stuff real quick. So, the COVID low was here. All right, so think about that. Netflix has already, what I've been saying, anytime I see stocks like this are kind of already in a very deep, dark recession. Hopefully, we won't, the S&P won't look exactly like this 6 months from now. But is it possible? Yeah, it is. It definitely is. Um, so, and there's a couple of other, I would say, stocks that I think surprised people because they totally fell from grace. These were some of your Wall Street darlings. Nobody expected Netflix to drop 70% while the S&P is only down 25%. Right? So why did that happen? If you're an investor in it, you should know. You should know. If you were a trader and we just talking about trading it was actually pretty easy. Trading it was not really. I mean, look at this. After this period here, you already knew where it was going. It was going back to the COVID lows. Right. If I was to pull up the squeeze, the one indicator I've talked about, For fun, real quick, I'm gonna just throw the squeeze on. Let's see, when did the squeeze turn red? When did the squeeze say, "Hey, this stock is bearish"? Right here, January 3rd. The squeeze on the week turned red. So, and I know that's like, oh, Noble, is it really that simple? No, it's not. Of course, there's a lot of time and learning and education behind me pulling up something like this with the level of trust that I have in a tool like that. Yes, definitely there's years of confidence in my voice, right? In my experience. But I think you kind of have to have something that helps you to kind of see these things a little bit clearer, because sometimes it really is just very obvious. It really is just very obvious. um Adrian, I'm about to pull you on as a co-host since you're trying to take over my show. I'm just playing. I'm just playing. I'm always having fun. I appreciate the comment. Let's see. Adrian said, "Don't forget to tell them about a bullish collar, short lower price put, and long call higher price call." Maybe you can say that for paid subscribers. Okay, so Adrian is talking. He is speaking as a educated trader and investor. And if you're like, what the hell is a bullish collar? Short lower price put plus and a long call higher price call. What does that mean? So that's actually a great segue. It's a really great segue. Matter of fact, let me pull up one. Andre Swanson said, "What's happening, bro? What's happening, bro?" Man, I can't even do my normal. I be getting hyped when I see people. I know I can't. My voice died. Okay, so I'm gonna come back to Adrian's comment real quick. So, as a matter of fact, Adrian, that's a great segue. Let me do this real quick for you guys. Let me do this real quick. Actually, let me take this down for 1 second, and then let me pull this up real quick. Okay, so great segue. I had a series of 4 workshops. 4 workshops in August. These were free. I had some people who was like, "Man, that was so good, bro. I have no idea why you didn't try to make some money on those. Like, I legit would have paid 99, 159 for something." Like, I walked away with a much broader understanding. I actually learned something. I want you to watch that webinar. It's free. It was an option strategy workshop. What Adrian just pointed out, if I started talking about a bullish collar or calendar spreads or verticals, your debit credit spreads, straddles, strangles, iron condors, the number of people who are going to know what the hell I'm talking about are going to dwindle really, really fast. Even in a room, right? If I literally was in a room full of options traders, what we know about the market, what people like me and Adrian know, is COVID brought a lot of new people into the market. A lot of new people over the last 18 months. I probably did like 200 consults with people one-on-one who are inside me and my cousin Joel's insider trading free group on Facebook. We try to educate and help people to stay abreast. There's a great community, you know what I mean? And we started it 10 years ago when only people we could really talk to about the market was he and I talking to each other. So we started the Facebook group because we wanted to have a bigger, stronger community of people that we could talk to, who look like us, and so it's been great having that community. But what I've noticed over the last few years as well is that a lot of people with options only learn the basics, buying calls and puts, and then that's kind of it. And I think, if I could say anything, options is really, really powerful because it gives you so many options of making money. I got a post that I'll put it on my Facebook page tomorrow. If you're in insider trading, you'll see it tomorrow. Did you know with options you can make money you can profit even when you don't have a strong bias on the direction. And you're like, I don't know. We could go this way. We could go that way. Now, I'm not saying this as easy as just either way is guaranteed to win. You know, I'm not saying that. But there's something called a strangle, where essentially you're buying a call and you're buying a put. You're essentially playing both sides. So if you know what you're doing, if you understand the math behind it, if you feel confident enough to do it, and you know kind of when it makes the most sense to use this specific strategy, guess what? You don't really have to like nail the direction. You know, everybody thinks, well, how do you make money in trading? Well, you got to get the direction right. If I'm long and the stock moves my direct, that's technically true. But options is just it's just a whole nother thing. It's a whole nother thing when you really get into it. So that was a perfect segue because that workshop that I did was designed for free to help you to understand that there is a lot more to learn about options than just those basics of buying calls and puts. And they just give you more options with how you can make money. And once you get into those, you'll be just be amazed at like some of the things you can do. And so, I kind of just in my own way, I used one example and I slowly just kind of changed it from, okay, you're understanding calls and puts. If you're somebody brand new, you don't even know what options are. I walked you guys through that. And then I said, well, here's another thing. And if we change this one thing, then that's this. And if we change this, then we can do that. And if we change this one thing. So I kind of wanted to show you all these variations of strategy. They're different option strategies that just allow you to make money in different type of environments. Right? You can make money when you don't believe price is going to go up or down. We're stuck in a range. You don't think we're going anywhere. Can you profit off that? Yes. Can you profit when you don't 100% feel like you know the direction? Yes. Can you feel like it's just it's whole other world when you get beyond just the basics of calls and puts, right? So this next 8-week class that I have is starting on it's right here on my screen. October 11th. It's gonna be 8 weeks. I can't cover every single advanced strategy, no. So I'm not gonna cover 75 strategies because there's probably that many. But we're definitely gonna get beyond calls and puts. You're gonna probably I should know the exact amount. At least 6 to 7 more that I think every trader should have in their toolkit, if you will. And I think I figured out a way to teach them really efficiently. Because if you can understand, you know, if you can understand the basics, then it's just very small changes. It's just one little change. Make sure you understand the technical, what's changing, how this strategy works, why we use it, when we use it. You don't use all these at all the time, right? So it's like there's certain situations that you can do different things. You can always manage the risk. You have to do that. So yeah. So I'll post the link. Actually, matter of fact, even better. If you want to watch if you want to check that out, all you got to do, go to limitlessclass.com. There's a video. There's a button right here. It says, yes, I want to watch the options workshop. All right. So you click on that, put in your info. It's going to take you directly to it. You can watch it now. You can watch it later. You can watch it whenever. And it's also going to give you a lot of information, access to learn about the class as well. So had to make sure I do that because Adrian, you gave me a perfect little setup to talk about that. So let's see. Yep. I think that's about it, y'all. I think I've hit that. You know how like when you're not really feeling amazing, because I haven't taken my second. Like you get COVID, you're like, oh, I feel way better than I felt Monday and Tuesday this week. Well, Monday and Tuesday last week was when it was really bad. So I feel better, but I haven't taken my another test to see if I'm negative yet and all of that. But I have clearly been quarantined, so I'm still alive. I'm here. Thanks for watching, man. As I'm holding the mic, I'm not at home, so I appreciate y'all working with me. Kind of knowing I didn't have my normal setup with my little sounds and everything, but I wanted to hit some stocks and cover some things today. So hopefully this has been helpful. Thanks for being here. You can subscribe on my YouTube channel. It's Being Noble. If you're on Instagram, it's just Being Noble. So if you're here on Facebook, clearly, you know I'm here on Facebook. And if you want to sign up once again for that free options workshop, if you want to find out about the class, great. Do that because some of y'all know you need it. But if you're like, you know what, I just want to learn, cool, learn for free. That's why I did it for free. It's a really good workshop, and I want you to take the quiz at the end. I'm gonna start to be really, really make sure everything I do has a quiz, some sort of learning component, so you can test yourself to see what you learn. Because there's so many educators now in this field, and it's so super saturated, but nobody actually tests you to kind of see if you've learned what they even are attempting to teach you, right? So you can take that 90-minute, you can go through that 90-minute workshop. You're gonna learn a lot, and I want you to take the quiz to see if you think you learned what you think you learned. Because very few people can answer all 10 questions. Very few. So have some fun with it, as I always do. So yeah, man, that's it. As I always say, share this video with somebody that you know and that you love, who needs to seriously start to move beyond basics with options. Start to get serious with your investments. Start to get serious with your trading. If this year continues to be a bearish year, it's going to get a lot worse really fast if there is no bounce here at this double bottom. And that doesn't mean we can go a little bit lower and then start to get some sort of recovery. Don't get me wrong, but as I end here, I would say, based on all of my analysis from 2008 and pretty much every major recession we've had over like the last 30, 40 years, this from a technical perspective is pretty much set up. It's looking the exact same way. So do I think the market is going to go lower? If you had to ask me if I had to go there, then yes, I would say my technicals are saying that there's a really, really high chance that we continue to stay in this downtrend before we're, truly trying to reverse coming out of it and then back in a true uptrend. So hopefully that helps. Talk to you guys later. Peace.